Thank you very much.
Okay. Yeah. Yeah. Good morning. I want to welcome everyone to this meeting, this training. I think this will make it the third meeting or training we'll be holding in the technical analysis masterclass, and I'm so excited because we have come to understand a fact, and the fact is that you can make tremendous progress in anything you choose to do if only you with knowledge. Yeah, you can make tremendous progress in anything you do, any business you, any endeavor you are with knowledge. So knowledge is an edge in anything, in any subject, in any situation, in any industry you find yourself. Knowledge is an edge, and that is why 25 we make it a culture to pursue a policy, a principle, a strategy that is knowledge driven. Yeah, we believe everybody is knowledgeable about the crypto industry, the blockchain industry. It will be a whole lot easier for whatever we are going to do. It will be a whole lot easier for Africans and anybody that is on the community member to maximize the potential of cryptocurrency. Okay, without wasting more much time, which I've already done before, I apologize. It's due to system error. I don't believe in what they call African time. It's a culture in Africa, but I don't believe that it's not professional. So it was a technical issue that led to that. Okay, right away, how to use EMA in technical analysis trading. Yeah, I'm supposed to demonstrate straight, but I'm very sorry for the technical issues, which I believe I may do a live record of this video later or during next week and post it to the community, to YouTube channel, so that we can all learn based on the live chat. Okay, how to use EMA in technical trading. So the goal of this training is very clear. It's very clear. And the goal is one. We want to understand what is EMA. EMA means exponential moving average. When it comes to trading EMA, it means exponential moving average. We will explain that. Then also, my initial goal was to demonstrate in real time how we can actually close it, use the EMA strategy to execute the short-term position and to execute the long-term position. Yeah, so that was my initial goal. That was what I have in mind. But however it is, we are going to do it. I'm going to use this prototype, the screenshot prototype, to demonstrate to my best ability by the grace of God. Okay, good. We will start right away. What is EMA? Can you all hear me, please? If I should continue, let me know.
Yes.
Okay,
yes,
good.
We can.
Okay, fine. Thank you for your patience. Okay, EMA. We actually have different kind of indicators, different kind of analysis on the activity that go on in a financial market. Or either financial market generally, that's being stock, crypto, being bond market, being forex, whatever market it is. So the activities that go on this market, we have different tools to analyze the activities that go on in the market. So one of the indicators is called moving averages. And in moving averages, we now have exponential moving average and simple moving average. Now, the difference between these two is based on the computation. So there's no in practice there's no more difference, but in computation, simple and exponential, it is. I don't want to go into the technical and the mathematical part or statistical computational part of this analysis. But what I'm trying to say is that moving average can either be simple or exponential, but we are going to dwell more on the exponential moving average. Now, moving average it means I'll explain it to be simple as much as I have it in mind before now. Okay, a moving average is what we call lagging indicators. There's what we call lagging indicators. Lagging, the word lag, it means something that has happened in the past. Something that's happened in the past, and because that's happened in the past, we can actually learn from how the market behaves. So moving average is a lagging indicator. So that means it's something that has taken place that we are trying to learn. We are trying to use the trend it's forming to predict what will happen in the future. Do you, if you believe, you agree with me that if it's dark, if the cloud everywhere is dark and it rains, the first time you did it, you expected that, oh, the clouds is getting dark and it rain. Second time, you also predicted that the cloud is getting dark and you know that it will rain, and it rained. And you have observed that for consecutively, you have observed that consecutively for more than 10 times, and it has happened 8 times, as it has happened 8 of the times. So you can now say, oh, this is with this pattern, you can actually form a pattern. Okay, since this pattern is from this, since this pattern is forming, I can predict that so something will happen. Okay, am I correct? Am I correct? Are you with me?
Yes.
Okay. So yeah, so that is what these indicators when it comes to technical analysis, that's what they help us to do. Okay, good. Now, according to one of the experts, he defines moving averages as lagging indicators which indicate a bullish or bearish trend, depending on the time frame making a cross. Okay, let me explain what this expert is talking about. Now, a moving average help us to know to determine whether a market is in uptrend or whether a market is in downtrend. Oh, I wish my this thing is my I'm connecting to live. I'll be demonstrating some things so that you see. Okay. Okay. That notwithstanding, I'll go on and explain before using my this screenshot to demonstrate again. Okay. Now, um, moving averages, we have. I was explaining that they are indicators that indicate a bullish or a bearish trend. Now, bullish means if you okay, we already know this thing, but let me explain for the purpose of understanding for everybody to understand. If the market is going, if the price of the market is increasing, and bearish means if the price of the market is declining, is dropping. Okay, now, and this indicator EMA, they have time, they have time that is associated with each of the EMAs. We have 50 EMA, we have 20 EMA, we have 50 EMA. It depends on, yeah. So, but let me now explain what the time means. Now, if we have 50 EMA, for instance, now look at the screenshot. If you can see my screenshot very well, can I draw? I should be able to draw. Okay, you can see my screenshot very well. After the BNB and USDT pair, you come under it, beneath it. Hello, are you with me? Please let me know.
Yeah, we are.
Good. Now, when you look at the EMA, there's EMA, we have the green, we have this cannot be red. We have yellow, we have red, yellow, and we have pink. Now, when you look at it, we have 5 EMA, 10 EMA, 20 EMA, and 50 EMA. So what these numbers means EMA actually take for instance, on this 5 EMA, it means it's the average, is the price average of 5 candlesticks of 5 candlestick. The price average of that 5 candlestick is the 5 EMA. So that is more of a short term. Now this 10, it means the price average of 10 candlesticks makes up the 10 EMA. 50 EMA, it means the price average of 50 candlesticks actually make up the 50 EMA. So it's very important. Now, when you're looking at a very longer view, when you want to take a longer view on the market, a higher EMA is advisable. When you want to take a shorter view, maybe you're a day trader, a shorter a shorter EMA is advisable to be used. Okay, but whatever you are doing, most time one of the person I learned for, one of the expert I learned for, he make use of 4 EMA. This 4 EMA we have, he normally has 50 EMA or 51 EMA. Then you now have short ones like the 10 EMA, 50 EMA, and 20 EMA. Now, so that you'll be able to capture, from the longer perspective and the shorter perspective, you'll be able to capture what the market is talking about, or what the market is, or what is happening in the market. Okay, good. Now, another thing before I move on to explain the strategy I want us to use in EMA, I would like to say that you can only use EMA when you combine it with candlestick formation. You can only use EMA effectively when you combine candlesticks and EMA together. In fact, the strategy I'll be teaching is actually, it hovers around EMA and candlestick. So the two goes together. So you should be able to understand the formation of a candlestick. The formation of a candlestick. Be able to understand that, and you should be able to understand, if a candlestick, if it's in a downward, it's in a bullish reversal, or if the bull is overpowering the bear. That means if the buyers are buying more than the seller, or the sellers are selling more than the buyers. So that is what candlestick tells a story, as I explained in the class we had previously. Okay, good. I'll move on. Now, there's what we call confluence when it comes to exponential moving average. Confluence is the meeting point. Okay, I was explaining the 4 EMA. Now we look at my chart. When you are drawing it, I would have drawn this. Okay, I would have drawn this. Okay, let me try to enter it again. Now when you are entering, when you are, because when you open your chart, it's not going to have all this setup. It's going to be blank. Am I correct? Those are trade. Okay, it's going to be blank. Most of these charts, I was planning to use a trading view, which has different tools and also drawing tools to use. Now, when you open your account, it's not going to have all this already set up. You are going to manually set it up. Sometimes you have to customize it to your taste to be able to navigate the chart. Now, in setting it up, when you're using the trading view, just go there and type in EMA. That means exponential moving average. You add it, then you now addict it to 10, 5, 20, and 50. Then once you do that, you have this, you have all these lines. Then you can also customize the color based on the color you want. Good. Now coming to confluence. Confluence is the meeting point of the moving averages. Hello, am I communicating? If I'm not, let me go back and stress it. Okay.
Mr. Progress, if I may cut you short, please.
Okay, go
on. Are you using a cursor on your screen? Because it will be much better if we are able to follow with a cursor. I don't know whether it is visible or you use another color so that it can be visible. It will be much more good.
Okay.
And,
yeah. I'm trying to improvise. So due to my network, I'm trying to improvise. So technically, I'm just trying to see how I can ensure that I still go ahead to teach without. Okay, let me see if I can use a cursor. But you can see my screen, right?
Yeah, we can see it. If you can make it dynamic so that when you click on something, people are able to follow and be much precise.
Okay, fine.
All right.
Let me try again.
Okay.
Please, I'm sorry for all this.
I think it's indicating that this session will be ending in less than 1 minute.
Yeah, and that this will be created.
So you share another one and we'll use it to join. So people can get a proper photo. Why that is happening.
Okay, back to is there a cursor? Can you see a cursor? Can you?